Most of our rules are pretty fair, I think, and balanced. I think that's why it ends up like that because you do get the feedback. Even if you right now don't think some of these things impact you, the rules are kind of forever. So just take them individually and think about it. Hey, if we were originating payroll, what would this mean to our customers? So I don't think you have to be in it to have a comment or a thought.
Welcome in, everybody. You're listening to Wrestling Payments, a podcast where we help payment professionals contend with the challenges of modernizing their payments operations and identifying ways to build for the future. If you're interested in payments innovation and modernization, you're in the right place. Now, let's get into it.
Hello and welcome to Wrestling Payments, the official podcast of the New England Automated Clearinghouse. I'm Joe Casali. I'll be your host. As many of you know, Wrestling Payments deals with today's most pressing payment issues and how the industry is responding. Today, I'm delighted to have Sean Carter, President and CEO of NEACH, and we can certainly refer to him as the ringmaster in this session. We're going to be talking about an upcoming NACHA request for comment. Sean, can you take a moment to just remind folks who you are and how you got here?
Oh yes, so I am president and CEO of NEACH. I've been here now 24 years. A long time here at NEACH. Started every part of the business. I was in accounting, education. We started our risk management stuff. I was in that group as well. So it's been a long road, but a great road.
Excellent. So today we have a really big topic. It's a NACHA, the National Automated Clearinghouse Association, request for comment. And what this means is it's part of the rulemaking process. This is where NACHA puts out to the industry, hey, here's what we're thinking of doing. What do you think? Do you agree? Do you disagree? How would you make it better? I tell our members, member organization, tell our members, this is the one chance you get to tell NACHA, let's do it this way, or we need more time, or great job, which all are valid answers, but this is what they're looking for, comments. This comment, and we're going to really be focused on the rule changes. This actually, you can go to nacha.org and see what they're asking for. They're asking for some information. We're not going to look at the information on this episode, but they're looking for comments on specific rule changes. And it's a pretty big list of what they want to change. They're looking for your input. Anyone who touches payments, if you want to comment, they want to hear what you have to say. And these will be due on June 16th. I would ask that you let NEACH know if you sent them a comment. You can certainly reach out to us and ask us about any of the topics on the rule changes. And right before we get to it, in the spirit of our podcast, we're going to have a rating system. So for those, if you're not familiar with professional wrestling, there's a player in professional wrestling called a jobber. This is a guy they picked up in the neighborhood and say, hey, we need you to wrestle tonight. Could you wrestle tonight? If you're a longtime fan of the WWE, Brooklyn Brawler was one of these guys. He would just show up and you're like, who's the Brooklyn Brawler? But he would always lose. He always did a good job, but he was always lose. So for those issues that we look at in the rule, in our opinion, only our opinion, is that easy, no problem, don't even worry about it. We're going to give it a rating of a jobber. And our ratings may be different, but that's going to be the jobber. In the middle, we have the great tag team champions, people like, Hogan and Macho Man teaming up, the Hart Foundation, any a big wrestler from the past that really made an impact. We're going to call that a partnership. This is a place where we think this rule is a combination of, it's good for you, it's good for the network. We think this is a good thing. And for those issues that we think there's a lot of work to this is a big change. We've got a couple of different ratings. This could be a King of the Ring match. That's a match where 30 guys enter, one guy every 10 minutes or 2 minutes, and they fight it out for an hour or more. Long match, a lot of different things happen. The other one is the Iron Man match. This is when two guys get in the ring and they fight for an hour. And whoever has the most pinfalls by the end of that hour, they win. Now, why is that a big deal? Because most matches last about 10 minutes, maybe 20 minutes. So an hour of wrestling, you have to be in really good shape to get through that hour. So that's our rating system: jobber, partnership, and king of the ring or Ironman match. And the Ironman match, again, is a lot of work. The jobber is easy peasy. So Sean, as you look at the list of upcoming proposed rule changes, there's a lot, and this is in alignment with NEACH's new risk management framework. It is new. If you haven't looked at that, you should go read a little bit about that. It is a change in how NEACH is looking at risk in the network. We have 7 rule proposals, and let me just list them out. So we have 1, expand commercially reasonable fraud detection. 2 is RDFI monitoring of received ACH credits. 3 is expansion of a return code, right? We have a return code already established in the network. We're just going to expand it. We're going to add a little bit to it. And as a foreshadow, for me, that's a jobber. It's easy peasy. Don't worry about it. Expand use of reversals for fraud recovery. Currently, you can't say, I want to send a reversal to get a payment back because it was fraud. 5 is additional exemption of funds availability requirement. 6 is standard company entry description. And 7 is standard use of the individual name. So Sean, let me turn it over to you. How do you want to work these?
So first, I don't want to undersell the proposal, right? So this really is a shift in the mindset of how NEACH looks at the network. It's always been ODFI, 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 and there's going to be asks of the RDFI here to help reduce the number of successful fraud occurrences in the ACH, right? So that's kind of the background. So I think we should start with number 1. I think that's it. This one is something that if NEACH didn't come up and propose this, NEACH was going to put in a rule proposal for this very topic. So, what it's talking about is currently for web transactions Intel, there's these commercially reasonable expectations that the originator is doing certain things prior to originating the transaction, and not just talking about expanding that. Right. So the biggest one we think about is account validation, right? That's something that is new it's a newer rule, but it was always part of the expectation. So to me, Joe, this one is an easy Iron Match, King of the Ring, whatever you want to call it, because there's a lot of moving pieces to this. It's a great idea, right? I think it would help. It would put more onus where I think it belongs, on the originator side, right? So this one is less about the RDFI and more about the originator taking ownership of a transaction, which has always been how the network's been run. But this has a lot of pieces. And you're talking about changing technology, making sure the providers that offer services to originators can be ready. You're talking about, everybody getting on the same page as to what commercially reasonable is, right? So the rules currently say that micro deposits are good and pre-notes would be acceptable, but we all know there's commercially available technology that can do it a real-time account validation and even match the name, right? So this to me is a longer haul type of proposal because there's a lot of moving pieces. There's going to be cost, right? There's going to be cost to the originators. And if in fact it makes it as a rule, the ODFI is going to have to do a lot of training, which we can support. They'll also have to make sure people are actually doing it. So I think this is definitely King of the Ring or an Iron Man match, however you want to phrase that.
So just for the audience purposes, we didn't rehearse this at all. So this is all right out of our minds. I'm on the other side of this one. This is easy. This is a jobber. And I say that because the one thing that rule to authenticate an account was new recently with web debits. They not just said web debits. We need to make a rule that makes it, you have to have some commercially reasonable fraudulent detection for web debits because you don't know what's on the internet and we need that. And the one question we always got was only for web. So this expands that answer to not anymore. So I think this is great for the network, and they're doing web. There's an ODFI is doing web right now. They just have to turn it on for the rest of the SEC codes. But I do see your point that it has a lot of tentacles in a lot of places they have to go to update it. So I could be convinced that it's a partnership, or not as easy as Brooklyn Brawler. The note on this I want to add on this one is the proposed changes. All these proposed changes, not just proposing to put them in 2024. This one is scheduled for September. So there's an area, if you don't want to respond to any of the other comments, if you say, whoa, too soon, we need more time, need more lead time to make this change, you could simply reply with make this 2025 or some other recommendation.
Yeah, you can support the proposal and tell them that the date is not in line. So let's say you talk to your provider and they're like, this is not going to happen within that time frame, you can certainly comment on that.
And, again, this is the one time you can make the recommendation, the change, and not just listening, open to it. If you got to the summer of 24, and we said, no, we need more time. It's much harder to change an implementation date there than it is right now with NEACH. Okay. So let me kick off number 2, and I'll just kick it off. And I'll kick it off with, I think this one is a King of the Ring, Iron Man, lots of changes. This one is saying that an RDFI now needs a commercially reasonable procedure to monitor incoming credits. I'll turn it over to you, Sean.
Yeah, I'm going to have to agree. I think this is a long haul type of thing. And I think that answer will depend upon the size of the institution, right? So the big guys probably, this is not that big of a change, right? So this is going to be about the technology and the experience of your people. So I do think this one, however, for the majority of NEACH members, will take a lot of planning, a lot of, hey, how is this going to best work? How do we not, interrupt or give someone a negative customer experience, right? Which nobody wants to do. So I do think this is an Iron Man. It's really a last resort, right? So if you think about the network has always been ODFI originator. We've tried everything on that side in theory to help reduce fraud. Education doesn't seem to be sticking with the end users, right? So obviously we want to keep promoting education to end users, but not just work on this risk framework showed that there was an appetite for people to have the RDFI do a little bit more. It's not totally foreign to an RDFI, right? Because you have AML, you have to make sure it's just tying that to ACH is where the work comes in.
That was one of the learning points for me, really. When I think of an RDFI, I think of a small community bank that only receives ACH transactions. And oh my goodness, how hard will this be for them? But, one, most institutions are senders and receivers now. So they have both sides of the equation. 2, there is already this requirement in the law that says you really should be checking your accounts. And if there are any suspicious transactions, you should be doing something about it. So I've come a bit of a way. I do still think it's a heavy list. And that may be because of the systems more than the idea that we want to do this.
Yeah, the challenge is the ACH batch processing system is going to make this a little bit more difficult, right?
Mm-hmm.
Because you have to find a way to do that work without upending the 99.9% of the transactions that are going to be fine coming in. So, that is the challenge.
And is this one commercially reasonable too?
Yes.
So that means that similarly situated institutions doing sort of the same business as you. So this is a place that you do need to collaborate with other institutions like yourself to get an idea of what is commercially reasonable for us.
Yeah.
Right. Do you want to kick
Or
off?
a judge decides that, which nobody wants.
We don't. Yes. No. We don't like the judge. The judge not deciding, because sometimes it's like you decided what. So yeah, keep that out of the courts, and that's why NACHA is here, creating the rules before you need a judge. Do you want to kick off? Do you want to kick off
Yeah.
3, 4 even?
Yeah, so both to me, number 3 is a brook and brawler jobber, right? Just expanding an available return reason code, I think it's easy for everybody to do, and it does give you an out as an RDFI that may be struggling. What do I do with this transaction? Right? Because sometimes people do spot bad transactions, and part of the problem is they don't know what to do with it. So this does help in that regard. So I think this one is a very easy one. The next one,
Mhm.
so this is an awesome one, right? Because I know people, not mention any names, that are also on this podcast that would argue that you can already use reversals in the cases of fraud because it all depends on how you look at the definition of unintended receiver, right? So if I'm
Right.
sending a payment out and I didn't mean it to go to the bad guy, that's an unintended receiver, right?
That is an unintended receiver. Thank you. Yes.
Exactly. I know the argument. I happen to follow the intent of the rule, which is not to be used for that.
Mhm.
But it begged the question. So on NEACH's Risk Management Advisory Group, which I'm a part of, we started having this conversation.
Just
right?
a quick commercial. What is the Risk Management Advisory Group?
So NACHA has a couple of committees. One is the Rules and Operations Committee that helps work on, Joe, which you're on, helps work on the changes in these proposals you're looking at. The Risk Management Advisory Group is kind of before that, looking at issues related to risk in the network, working together with FIs, PAs, everybody involved in the process to help put some tools out there. We put out a lot of articles as our mag. We worked with NACHA on the framework as a group, but this has been a discussion for longer than that work. Is can we use reversals to help in this help, right? Because it in theory, logically, you should be able to reverse something for fraud, but it hasn't been NACHA's opinion that you could the current system for fraudulent transactions. And there's a lot of reasons for that. Using the word fraud, it implies that the network's endorsing that somebody's doing something wrong. There's reasons behind it. But with the increase both in P2P and the B2B fraud, it's time to take a look at, can we use this process now? It's about giving the RDFI and the originators as many tools as they possibly can to help get the money away from the bad guys. And this is a step in that direction. So I think this is a partnership, Joe. I put this as a partnership. I don't think it's a slam dunk jobber, but it's just changing the definition of reversal. So there's not really a technical or long haul change, but it really is it's gonna require a group thought on this. And do we really want to open that box up for reversals? Because there's anybody that lose money, call that a reversal, right? So if a payroll company gets stiffed by their customer, are they now going to reverse those payrolls because they're going to consider that fraud, right? There's some things to think about. So this will definitely have to be a partnership.
So I have to agree with both of your opinions. Note on the R17 change, that one would be in March of 2024, and this one would be in September of 2024. We could do a whole episode on reversals and how they work or how they don't work. This one does have some slight new words in the ACH, new defined words in the ACH that, of course, you need to program in. So even if you're never going to use it or you don't want to use it, you will need to just keep track of this one for some word changings. All right. What do we got?
Right.
Oh, this is a super interesting one. So I'm gonna cheat and ask Sean to explain how can you delay posting of an entry in the ACH.
So currently the rules allow delayed availability if you suspect that it's a inappropriate credit. That's not the exact word, but you're still bound by your Reg CC end of next business day posting requirement for an electronic deposit. So now you're required to reach out to the ODFI and try and validate that the transaction was good, right? Reach out to that company. Did you really mean to pay Joe Casali, right? So that is on any credit that you're allowed to do that today, right? And This is about specifically for fraud events or schemes, right? So that's gonna, give again the RDFI a little more protection cover, so to speak. So when you do that BSA work up front and a transaction kicks out, you don't have to, you don't have to panic to get it in by certain notch of deadlines. So, again, this to me is gonna take some conversation, right? People have to give their thoughts on this because one of the things that we're selling ACH on is how fast it is, how convenient it can be. Too many of these transactions get caught up in that, where you get consumer complaints. Then you get the federal government involved if they're saying, hey, people are purposely slowing down deposits because the government wants people getting their money faster. So this is a hard one to rate for me. It really is, because I think it's not a lot of work, obviously, but there has to be some thought behind it.
So one of the interesting things that comes out of when thinking about this rule change is that process, which you explained really well, is already in the system, right? There is already that exception that if you take an entry suspect, you can say, we're going to ignore the notch posting requirement, but we know we have to contact the ODFI immediately. We can't just suspend posting and not do anything. We have to contact the ODFI, and it defaults back to the rules say post it, immediately. Reg CC says post it the day after presentment. So it's really still within a legal framework. And they're just, I think part of this is to remind folks that you still can use this, because there are some parts of the ACH that people don't use because they're just not aware of them. Yeah, I like this one too. I think this one.
There's a benefit just talking about it and seeing it in RFC. People start to realize, oh, I can do that.
Exactly.
Right.
Exactly. Oh, I didn't know we could do that. Exactly. All right.
So you want to take the payroll one?
Oh,
Yeah.
yeah. So yes, I'm going to try my best not to be sarcastic, but I may not be able to do that. So in the ACH, there are some things that are defined words that when you send out a batch of reversals, it says reversal right on the batch. There's a brand new one called account verify, ACCT verify. That's for micro deposits. When you're sending out a micro deposit, it now has to say account verify. And finally, the one that we use when someone returns something to us, if we got to retry that, we call it a retry payment. So those are defined words in the ACH. My sarcasm is it took 50 years for the ACH to decide that payroll entries need to now have the word payroll as the description. A little sarcasm on that one. I do have one more. So for specifically e-commerce purchases, this one it has to be called purchase. If I didn't understand the bigger picture, I would think these are silly adjustments and they're no brainers, they're jobbers. But maybe I think of this as a partnership, because what the ACH is doing, I think, and Sean, please feel free to agree or disagree, they're standardizing things so that when you look at new payment systems, they're using standards like ISO 20022 that have defined things in certain fields.
Yes.
They're just using, so we'll be able to identify a payroll entry, not only that it's a PPD credit, but now that it's a PPD credit that has payroll in the description. And now it's easier for compliance and data analysis, because it's going to go look and say, oh, it's a payroll entry, because the word payroll spelled in the right way, not abbreviated, not slang, not weekly payroll, but the word payroll is in the field, and the computer can pick it up and say, that's a payroll. Well, that's a purchase because it's purchase. So I like this one. I think it's a no-brainer. I would put it on partnership. Agree, disagree?
No, I agree totally. And the other benefit too will be that data capture for NACHA, so they can start to look at, because right now nobody knows
Mhm.
based upon just SEC code. What are the transactions that are causing problems?
Mhm.
So once you get the standardization, the data becomes really clean, whether it's for their own FI, right? Your own FI could start pulling things on, hey, how many payroll deposits are actually misrouted? How many, start to look at that, and maybe then you do outreach to your community about, hey, be careful when you get a change for payroll. So I think this is long overdue. And in theory, the entry description should always describe the payment, right? And use cases are important as well, so you can actually start seeing what the network's being used for, right? Which also will tell you what it's not being used for, and then maybe
Mhm.
you can yep. So I think it's I Austin would say no brainer, and I don't think it's all that hard to do. It's more of an education than a
All right, let me tee up the next one and the last one that we're going to cover. So I think this one's hard. It is exactly, I think, for the same reason I just talked about, the standardization, so that the computers will have an easier time looking at a transaction and saying, oh, I know who this is for. It is a name, individual name standardization entry. And it defines, and I'm really simplifying this. It defines how a name needs to appear on a transaction. So it really, I mean, the explanation, and you can go look at it on the RFP presentation. It is last name space, additional last name space, suffix space, first name space, middle initial space, oh, star and ampersand star, second receiver's first name. And it all goes until you run out of space. So
yeah.
I'm a little set aback by this one, because I do think it's going to have a big impact. Every file going to a person, whether it's an expense reimbursement, a payroll, it could be a withdrawal from the retirement. The name may need to be changed, because if it's not coming into first name, middle initial, last name, and second last name, second person, it's going to need to be addressed. And I think that could have a lot of impact for the industry. Sean?
Yeah, so this one is the only one I put no next to, so I'll be I'll be honest. To me, I get it. I get what they're trying to do, but this to me is too big of a shift from we don't really care about the name to here's how exactly the name. To me, we're going too far, but I do think it's a good conversation topic, and not just should get the feedback because there is a lot of, hey, I'm using my account, I'm letting someone use my account to get deposits, and it's really hard to tell when that's normal behavior, when that's fraudulent behavior. So I understand why it's in there. I just think this is a tough. When you read it, if you go through and just trying to get everybody to understand how even Joe just explained it, I just think you're gonna have a lot of mistakes, a lot of people not following the rule anyway. Which I hate having rules that we know people are gonna get around or not follow, because I just think it cheapens the rest of the rules. But yeah, I think this is again. I conceptually, I'm like, yeah, but then it's hard. Like how do you do that? So yeah,
Yeah, no, I agree. It's, the first time you get introduced to it, it's like, what? You want to do what? Some files, there's some folks who set up payroll 20 years ago and haven't touched it. So you're asking them to open up the patient and change things.
yeah,
I think it's hard.
yep.
But do you have any final words on anything? I have a couple of final words. Let me go, and you can think about what you want to say. This is the one opportunity anybody has to put their input into the rulemaking process. There's probably other places you could do it, but I always think of this as the place that if you can't do it, if you say this rule is going to break us and it's going to cost us a lot of money and I can't do it in the time frame, this is the time to get vocal and say, I can't do it. I need more time. I don't understand. Whatever the feedback is, not just asking for the feedback. This is the time to give it. You can give it yourself. You can call us and give it to us, and we're happy to include you in our response. but this is the one time, the one opportunity you get to make a change, make a difference. John?
Yeah, no, I agree. I that's my thoughts on RFCs. I think it's a really cool process that NEACH goes through, and that's how you get to a. Most of our rules are pretty fair, I think, and balanced. I think that's why it ends up like that, because you do get the feedback. So, even if you right now don't think some of these things impact you, the rules are kind of forever. So just take them individually and think about it. Hey, if we were originating payroll, what would this mean to our customers? So I don't think you have to be in it to have a comment or a thought, because it's kind of like the way the Fed worked with people on FedNow, right? Nobody was using it, but they wanted your thoughts on how you think it could work. And so I think the RFC process is really important, and we're here to help. Obviously, if you want to have us jump on a call with a couple of your staff to go through these things, we do that all the time. Our team's putting together a communication plan. We have a little survey that we hope you all fill out about how you do AML today, and maybe that'll help inform our opinions. But yes, I think it's a great process, and I hope everybody takes the time to do it, because this is the time. So,
Time. All right. Thank you, Sean. And as a parting words, NEACH Wrestling Payments is a home, very home in the payments arena. Our initial focus is on resources and careers. I think this is one of the topics that we needed to cover, to say this is changing now, and it's permanent. This is how things will be if they all get approved without any comments. This is the time for your comments. Look forward to your feedback. Please subscribe, give us a comment, give us a rating, all the things I'm supposed to say. Thank you very much.
On behalf of NEACH, your trusted resource in payments, and our guests, I'd like to thank everyone for tuning into the podcast. If you've enjoyed this episode and want to hear more about payments innovation and modernization, you can find the Wrestling Payments Podcast on the podcast page of NEACH.org or wherever you subscribe to podcasts. Just search for Wrestling Payments in your podcast app. Thanks for listening.